Hey everyone, wanted to do a analysis of Bitcoin post FOMC. We just had a 50 basis point rate cut. And while we did see some volatility to the upside, it is Friday and things are rather flat into the downside. So taking a look at the monthly, we're going to take a look at our oscillators. And the monthly is, or the 2 month is peaking right now, which is not great, but we don't have a lot of data to go over when it comes to market cipher on the 2 month. If we take a look at the stochastic, you can see that we did have a cross, and we don't have history for a second cross that we usually get on the smaller time frames, which would indicate a buying opportunity. If you remember, when we look at Crypto Cache's videos, he's always looking for that second cross to the upside to take a trade. I'm not saying that this is going to happen, and if it did happen, to be the first time on the 2 month, but we just need to be aware that we did have a cross. That could be a sign of a peak. And if we look at these smaller time frames, we can see whether the smaller time frame stochastics may beat the larger 2 month time frame stochastic. So what I mean by that, as we go to a smaller long time frame stochastic, you can see that we're already crossed the downside in March, which makes sense. We peaked in March and it's been downhill in a a bullish flag pattern. And we potentially could cross before we hit the 50 on the monthly. What I think is going to be more interesting is going to be the 2 week and weekly. But you can see there are instances where we do peak in the stochastic on the monthly. We start to come down. We had a fake cross out back in 2020 in February. And then we did eventually cross back up. And I think that might have been the second peak potentially back in 2020. And we did dip below 50 and came down to about 38 on the stochastic. So we'll take a look and see what happened. And what do you know? This is actually the beginning of the bull run, funny enough. So that could be potentially something that could happen on the monthly, and it's something that would make sense. So this area right here is where we think we are. If you are of the opinion that we are in a 2019 scenario, and if you don't know what I'm talking about, take a look at one of my prior videos, or take a look at Ben Cowan's long-term analysis of Bitcoin, because that's where I got the information from. He found this fractal right here, and we can take a look at that if you all have questions on it. But again, we potentially might be in a scenario where we are reconsolidating for the bull run, and it does not exactly coincide with the halving. This orange line is the halving for 2020, and we did have a halving in 2024, and we think the cycle started early. And again, if you look at Ben Cowan's analysis, his long-term analysis, you'll see that we're back in line with the other halving cycles, meaning that price is back to where it should be under the Bitcoin cycle theory. So taking a look, we had a cross in the bull flag area back in 2020, and we have that fractal here. We have our bull flag, and we had a cross, and we potentially may have a fake out. Potentially, that fake out was actually the COVID pandemic event. Again, if we don't have a macro event, we probably won't have another dip. Again, if we do have a dip, expect the Federal Reserve to add liquidity quickly, because that's exactly what they did back in 2020 for the pandemic. So there is some similarities here, both in the stochastic and price action. So again, this is the monthly. This is where the bull flag started to descend back in 2020. We had a fake out because of the pandemic, and we crashed. Fed brought in liquidity, and we had a halving event, and we shot up for that second portion of the Bitcoin cycle in 2020, and the rest is history from there. So we do have some of the similarities here. We had a peak in March. We had the building of the bull flag, and now we're descending back to the 50 line as we consolidate. So nothing really to worry about here in the monthly. It looks pretty good. The 2 weekly, it looks like we are bottoming on the stochastic, which is a good sign. We have the stochastic, the RSI and the MFI both above 50. And if the stochastic begins to turn to the upside here, these could flip as well. And it'd be really bullish if we stayed above the 50 here. We start to go below that, we're probably going to hit some lower price points below 60K and potentially down to 50K, where we do have some consolidation areas. And we do have that CME gap as well. When taking a look at the 2 week on the market cipher indicator, we have rising money flow, which is a good sign. There is curvature in the VWAP, and there is some curvature that you can't really see here on the momentum wave. So that shows some promise on the 2 week. On the weekly, we have fairly good money flow. On the larger formation of the money flow indicator, it does show curvature back to the downside. And it's too early to tell, but we do have some curvature here, along with some momentum waves with buy dots that could push this back up, and a cross in the VWAP. We look at the traditional oscillators. We've been down here consolidating with a stochastic, and MFI and RSI are flipping back to the upside with RSI above 50. So I think these are good signs of a consolidation period in Bitcoin on the long-term time frames. And the stochastics and oscillators show that on both market cipher and the traditional oscillators. Looking at MACD on the weekly, it looks pretty awful with this histogram, but it is showing some promise of coming back to the upside. And the short and fast lines look like they are curving back to the upside after a prolonged down period, which coincides with, again, this is the orange line for the halving event and the consolidation period in price. And price has not dove along with these oscillators. As you can see, it really looks like a consolidation period. So those are all good signs. Now, as we zoom in here, and we'll come to the daily time frames, you can see that we did have a red trend line to the downside that was just recently broken as of last Sunday. So that's excellent news. Coming down here to the daily, we are in this descending parallel channel. We did have a drop down to this key price area of $49,000, which coincides with the peak of this consolidation period right here, followed by a dump, a retest of this important price action area here, and then we had the prolonged bull run. So it's all good signs here. We are above this demand zone, which is good. And we retested the bottom portion of this descending parallel channel, which is the flag of this bull flag pattern. Now that we've gotten most of that out of the way, you can see that we are in an uptrend, and we did break that trend line to the downside. So these are all very good things. Now, the one thing that we need to look at as far as barriers to higher price action is going to be this peak right here, which stands at basically 65,000 exactly. So according to my chart, I use the index chart for Bitcoin, $65,092.50. So we'll call that 65,000. And that's going to be a psychological barrier because humans love round numbers. Taking a look at market cipher, we have a pretty strong momentum wave. And if you watch other YouTubers, I'm sure you do, who use market cipher, CryptoFace today or yesterday talked about this peak in the momentum wave here, which was a fake out. So that's one thing you need to be aware of when doing technical analysis, is that they indicate, they do not dictate price action. And this is a perfect example, because here this is potentially where you would do a short. But if you had done that, you would have been destroyed. You would have been liquidated 100%. Because you can see here that dot was printed at $58,197. And if you had shorted here, even with a 5x leverage, I'm pretty sure you would have come close to being liquidated. And that's probably what happened here. So again, this is the price point here, 58,300, give or take, 58,200. I'm pretty sure that would have liquidated at a 5x. And if you did anything more than that, you would have got liquidated a lot quicker. So taking a look at the traditional oscillators, again, you can see that in the stochastic RSI peaked and we were starting to come down, and then we had that cross at a significant stochastic level, which is 80. And we have MFI shooting up. We also have RSI bouncing off the 50. So these are all positive moves for Bitcoin when it comes to the oscillators. And the momentum wave is pretty strong here. Now, the one thing that I will say as far as taking trades, depending on whatever time frame you're in, we do have red money flow here. So that's something to be cognizant of. It really just indicates of indecision right here, because money flow is neither really to the upside or to the downside significantly. So we're still in a point of indecision, and that probably has to do with the economic state. Savings is down for most people, and we do have an uptick in unemployment, but people are probably focusing on buying groceries and providing for their families, and maybe not so much on throwing that extra liquidity in their pocketbook into risky assets such as Bitcoin and alts. And they maybe also be waiting on what the Fed will be doing. And I'm sure a lot of institutions are doing that. Some of the bigger institutions like BlackRock and MicroStrategy, they have the vindication that Bitcoin is going to be around for a long time, and they have the liquidity to outlast the Fed and its decisions and the economy. So I think they're in it for the long term. And taking a look at MACD, we have positive momentum to the upside, which is good. Now, taking a look at the shorter time frames. Now, we're going to go ahead and add some of our indicators, and the one that I think is going to be important for the long term is going to be the 2-week moving average, which is this moving average ribbon right here. So this is a long-term, or this moving average is a long-term moving average, and the one thing that is really good here is it looks like we just broke above it. Now, this will close on Sunday, I believe at like some UTC time, but Monday, if price is above $62,700, that'll be very good price action for Bitcoin to basically be more bullish. And you can see here that it acted as resistance back in August, and we tried to peak above it here in July, and it didn't really work out. And I forget exactly what the events were that caused that, but you can see that it really shows the bull run from the beginning. And the fact that we broke below it, retested as resistance, became a problem, tried to break above it, retested the flag, which was a good price action until we had whatever happened here in August, which crashed the price of Bitcoin. The other thing that I want to point out is we do have a W pattern here, and that is indicative of a price reversal. So taking a look at this harmonic pattern cheat sheet, I already put the layover on the Bitcoin price. We can see if this matches anything here. And this could be indication of a bearish cipher pattern. Not positive, but it's something to consider. And that really does coincide with some of the bearish callouts of some of the more bearish analysts out there. So just be aware of that. It's either a bearish cipher or a bearish Gartley or a bearish bat, depending on how you look at this pattern. So I think this could be a thing where we have price come up here to finish or complete this harmonic pattern, retest the resistance channel, and then we come back up. That's a possibility. And that would be in confluence with just expecting volatility in general. You also see that there is a significant level right here that I have down here as far as breaking levels. So we came down, tested the bear flag descending channel at the downside. We created this CME gap. So this is a bearish harmonic. It could be indicative of also a double bottom. I don't think we really can put heads and tails to it right now, but I'll keep a look at it and monitor it as we go. If we break below this trend line again, then we're going to have to restart over, and this was just a fake out above this trend line, so just be aware of that. Another indicator that I like to use is this best cloud all moving average, which is the 30 exponential moving average and the 74 exponential moving average. This is used by some other analysts to indicate the long-term bull run for the 4-year cycle. And you can see that it did indicate the beginning of the bull run back in October, and it never crossed until we hit here, which was June 28th of 2024. And we have been bearish. We had some fake outs, so this indicator isn't perfect. But if we take a look here, and this is used on the daily, by the way, we do have curvature back to the upside. So it's very critical that Bitcoin stays or breaks 65 and or stays above the local point of control at $63,000. If we break back below that, we're probably going to retest this support level at 58 and retest this resistance line. And that would be in confluence with this potential bearish butterfly harmonic pattern. And again, we're going to have to keep an eye on it because we do have a higher high from this lower low back in August. Now, taking a look at the daily simple moving averages, we have regained support of the 200-day simple moving average, as well as the 50 and 100, and we are now hitting resistance at the 200. Now, this is another simple traditional moving indicator indicating the bull run. And as you can see, if we go all the way back, it also showed, once we had that 20 simple moving average jumping over the 200-day simple moving average, the current bull run. And the more significant would be the 50 over the 200. That would have been better confirmation, but you would have missed all this price action here. But we did not recross the 200 till July. So that would have been a later indicator and you would have lost a lot of gains, but we are still in a downtrend and it is currently a resistance. So this is confluence with the butterfly harmonic pattern at the moment. And as we gain back above $63,000 and $65,000, the better we have for more upside. But I will say that it would make sense to potentially retrace here based off the lower highs. And that is something to consider. Now, the great thing here is that we do have a higher low. So what probably is going to occur, unless a decision is made early by the market, is you're going to see this pattern, which is the triangle pattern, which broke out to the top side. So that is a good sign that coincides with this trend line. All right, taking a look at the 4-hour, we'll take a look at market cipher. And we do have downward momentum with a bearish divergence line to the downside with very thick money flow. So what that tells me is we're looking at consolidation. So when you have high money flow like this with bearish momentum or a bearish trigger wave down to the downside, it's really going to show consolidation in price. And if we take a look at the price, we basically did that. We peaked. So we have the red dot here. We continued up. We hit a 9 on the trend reversal indicator. And then we did have some downside, but not a significant dump. And you can see that we're in an ascending parallel channel. We have the exponential moving averages. I like to use the exponential moving averages on the smaller time frames because they show a quicker reaction to price as opposed to the simple moving averages. Simple averages are going to be more conservative, but you may miss some price indications where the exponential moving averages are going to be quicker for you to react to, but there's going to be more false indications. But that's just how I like to do my charts. So I have the blue line over this magenta line, which is the 200 exponential moving average for the 4-hour, and the 50 over the 200. So that is positive for price to go to the upside. And then we take a look at that should be a 10 or a 9 in the yellow. And that is a 9 exponential moving average. So basically momentum is with price until price breaks below that 9 exponential moving average. And once it breaks below 9, or the 9 exponential, once it breaks below the 9 exponential moving average, that's when the trend has stalled. And now we're looking for either consolidation or a reversal or fake out. But you'll be taking a look at the 9 and the 20. If we end up, breaking through all the exponential moving averages, once the 50 crosses the 200, then we have a more significant change in reversal, and you want to change your strategy when it comes to trading. All right, taking a look at the hourly, we have the Ichimoku cloud up. And as you can see, price has bounced off the cloud back to the upside. We've had positive momentum since yesterday. And the lagging span is now currently inside price action. So if you're in a long, this is where you would want to consider to take profits. And we have the conversion line over the baseline showing a potential change in momentum. So this is consolidation. This is in confluence with the market cipher information. Again, we have bearish divergence with high money flow and decreasing momentum waves. Once, the money flow starts to dip negatively and we have excessive trigger waves to the downside, we may have a change in momentum. But with this increase in money flow, we are just getting consolidation that I briefed earlier. In confluence with the point of control here, we did have a spike in volume. We also had a big spike back here, which started the small time frame bull run, and it is the end of the work week. Markets are closed and volume is decreasing. So I would tend to think that we are going to continue to consolidate at the 63 level, which is not great because we want to get price well above 63 to confirm a positive reversal to the upside of the descending large bull flag and make 65K support. Taking a look at our exponential moving averages on the 1 hour, currently the 50 is acting as support. We did break below the 9, and we finally broke with a bearish cross of the 9 through the 20 exponential moving average, which is in confluence with all of our indicators that we are now consolidating around this price range. As far as timeframes go, when it comes to making smaller timeframe trades, I would trade with the trend, and this would be a buying opportunity for expecting more upside. Again, trading the weekends can be difficult because we don't have the volume and we are more susceptible to manipulation. So just be aware of that. Probably want to bring up your liquidity charts and just to see where the liquidity is. We'll go ahead and refresh this. And we do have some liquidity down at the 62K level on the 24-hour. We do have some concentrations at 64. We'll call it 64,500, and there is about 18 million in leverage at that level. And down to the downside, we have a little bit more at almost 18 or 19 million dollars in leverage at that price. We can also take a look at our liquidation map. On the 1 day, we have a cumulative short liquidation about at 68. Looks like a plateau is at 68, and there's about $647 million at that level. Opposite of that, at 57,500, we have $460 million. So there's just some things to think about. Obviously, when we have this consolidation period and there's low volume, there's indecision in the market, or there's just not a lot of players interacting with the market and they're deciding on what to do next. And again, that comes post of the Fed pivot, which is a big deal. Now, as far as the actual effects of a 50 basis point rate cut on the economy, it's negligible. It's going to be the psychological effect of the market trying to anticipate what is going to happen in the future. And as long as the markets and companies and employment stay where they are and they don't get worse and things start to get better and inflation stays low and we get that soft landing, things are going to be pretty good. If things start to break that we don't anticipate to break, that's just the way black swans work, then we could have that dip would coincide with the 2019 fractal. Again, that black swan ended up being the pandemic and the economic reaction to that. So just be aware of that as well. Spots are going to be your best positions. Use leverage with caution. Make sure that you are implementing proper risk management, and you should be fine. And never, trade what you can't live with. So again, this descending red line was our larger time frame trend line to the downside. We did break above it. And in conclusion, I had this price path put in at around 2 o'clock today, Eastern time, and we have pretty much stuck to it. We did break above this. I probably could have fixed this parallel ascending channel. It's probably curve fit a little bit, but it has kept price within its channel. Again, we have the 50 over the 200, which is still good. We did break this short-term trend line just recently, around 5 o'clock Eastern Standard Time. It retested it as support, it looks like. And again, we're probably going to continue with some consolidation. It wouldn't be unusual to test the bottom side of this parallel ascending channel, or even retesting the larger time frame channel. We may not do it this weekend. It could become later. Again, we do have those larger time frame patterns, that bearish Gatley harmonic pattern, potentially to basically retest this trend line to the downside. So trade with caution. It's probably going to be difficult until we get some more volume back, or there's some indication of trading during the weekend. So I would not expect a trade alert till probably Monday or maybe Sunday evening when Asia takes over. So I hope this was helpful. It was a little bit long-winded. I always like to go over the long-term timeframes first, just to get an idea of what the larger timeframe trends are. It's always a good review. You may see something you didn't anticipate, like I did today, which again was that W pattern that we have here. So that's all I got. I'm gonna take a look at some of the other charts. I'll try not to be long-winded. The Bitcoin price is the most important chart when considering other alts, so I don't need to go over the larger patterns necessarily on those in detail, just Bitcoin. And if you have any questions, or if you have any requests, or how I can do better, please let me know. All right, thanks, bye.